Hi, and welcome to another weekly recap. So, today I'm going to recap uh, week 15, and it's from June 2 to June 6, and the pair is GU. So, in GU, I did not get any trades on this week, but that would be a more interesting one in XAU, which you just saw that has been leaked. Okay, let's see what happened on GU and why I didn't get any trades. It's not that the price action was was ranging, or it did not give me any opportunity, or there was no movement in the price. The market moves as it is, but my entry models did not play out. So that's the thing. So there were targets. There were analysis, and there were a plan for taking the trades, but it did not meet the rules. The price did not come into my trading range. So let's see what happened on this week. So let's jump into the board and start from June 2, the daily chart. So as I already mentioned in the previous analysis, the daily chart of the first of the Mondays would be covered in depth, whereas subsequent days I'll be focusing more on the H1 pre-session analysis and the session updates, because the daily will be in the same area of value throughout the week, most probably, if there is no economic event. So, in the daily, we can see that the price is boss bullish, and this demand is currently holding the price. So, if I want this to be a protected low, and if I want this structure to continue, then I want this demand to hold. So, what I can expect, that there was a strong rejection, and price starting to push up. So, I can expect the price to push further up and take out this weak high. So that was it initial analysis. But yeah, price could give us a fake reaction and flip this demand zone, because this demand is in the premium and it can come to the discount prices, and there is a good demand right here, and this is where probably the lower high can be formed, and the price can continue the bullish swing structure if the price is bullish. So let's not think too much. Let's jump into the lower time frames and get our session direction. So here we go. Price mitigated into the daily demand zone, and it is chalk bullish. So once the price is chalk bullish, I can look for buys from this freshly formed demand zone, and then look for buys. And this actually forms relative equal highs, and which is a very good magnet for the price. So I can look for longs targeting this equal highs. So this is the H1 chart, 1 hour chart, and here you can see the price has actually internally boss bullish, and this is a very good POI from which I can look for sells, and this is in fact a flip zone. Price flipped it and pushed the price up. So if the price comes down and mitigates into this area of demand, then I can look for buys. So and also I can look for sells if there is a chalk bearish something like this. So I can look for sells because there is no demands to the left, so it's a one straight push up. So that could be a quick in and out trade of 2 hour or 1.5 hour, whatever I get. So that's it. 2 year is seller, and I was waiting for the price to mitigate into the demand zone and look for longs. But unfortunately, I did not get any trades on this day. Price did not make a chalk bearish or chalk bullish, nothing. So price just actually consolidated, and later at the end of the day, price went up and swept some buy side liquidity. So tomorrow, if the price chalks bearish, then I can look for sells targeting this demand zone. So once the price reaches this demand zone, then I'll be looking for the price to chalk bullish, a freshly formed POI. Then I can look for buys targeting this high. So that's the game plan. So let's see what happened on the next day. From the daily perspective, I say that the price is still in the same area of value. This demand is still holding, and this high is still weak. So I'll be looking for longs targeting that high. So again, here we can see from the 4-hour perspective, the price at chalk bullish, and there is kind of equal highs being formed in the from the 4-hour perspective. So which means that this could be my first target, and this could be my second target. So if I get suitable confirmation in the H1 right here, then I can look for longs targeting these two. Coming to the H1, so yesterday we marked this as the demand zone, and we expected the price to mitigate it, and I was ready to take a direct M15 entries. But since this demand zone has become a little bit old, I will be looking for further confirmations in the H1 before looking for longs. That is, further confirmation in the sense H1 chalk bullish. and yeah, price mitigated this demand zone, and the H1 is stock bullish. So this is the freshly formed POI. I'll be looking for price to mitigate this demand zone and push the price up. Yeah. One more thing, they actually look for direct entries when the price reached this demand zone. Here you go. When the price reached this demand zone, there was a fake break. There was a chalk bullish. So if the price chalks bearish, then that would have been an LZ2A, and I would have looked for buys from here, but that did not happen. And once H1 chalk bullish, then I tried to look for this was the H1 POI. So I tried to look for some valid entries from this POI, which I didn't get eventually. So I had to quit. So yeah, that's another day without any trades. So let's jump into June 4. Yeah, from the daily perspective, it's the same. This demand is still holding the price, and this high is weak. And I can look for longs from this area of value to target the weak high. So the target is the same, and again here the price again is chalk bullish, and this demand is currently holding the price, and there is some equalize above from the 4-hour perspective, and from the daily perspective we have this equalize second target. So since no uh, yeah, price did mitigate this demand zone, but price might want to mitigate this extreme demand before pushing up. So that was the initial idea when coming into this session. Excuse me. Coming into the session. So price actually the supply was holding the price. The price actually chalked bearish. So I expected this lower resistance liquidity can be taken out, and price can mitigate into this extreme demand zone before giving that push up. So I thought of, so yeah, this seems like a suicide trade. This seems like price might not want to push down because price is already in the demand zone. So for longs, I need to wait for this supply to fail, and then I should look for longs, because this supply is currently holding the price, and I cannot look for buys against this supply, because this is a immediate supply which can be respected and it can keep pushing the price down. So I expected the price to mitigate this um, H1 extreme pivot demand zone. So when the H1 chalk bearish, there was a valid lid right here, and there was a evening star kind of candle pattern, so which kind of get being respected, and price can push down at least to take out this sell side liquidity. So that was my expectation. So what happened, price did not give me any entry. It just invalidated the POI, and it chalked bullish. Yeah, a price invalidated the POI and it chalked bullish, and eventually it took out the equal highs and made H1 was bullish. So probably the resistance support and resistance traders mark this as a resistance zone, and they probably would have marked, they would have set the stop loss in limit order here targeting the lows, because it's in low resistance liquidity, and their stop loss above. So that's why this massive push up. So that's a clear liquidity hunt, but we have different ideas. So uh, we just escaped out of this massive liquidity raid. So price internal, was bullish, but there was no chalk bearish for me to look for sells targeting, playing this swing pullback. So there is no trades on this day. Cool. Yeah, actually, there could have been a trade which I just analyzed right now. That's why I got these boxes, which masked the next price action. So I told you that this POI got invalidated, which means that the price chalk bullish. So once the price chalk bullish, then I could have looked for buys then you know I could have looked for buys from this area of demand, targeting the in uh, equalize above. But I did not do that one. So I was why I did not do, because this chalk bullish was not much convincing, because it's a straight push up and price failed to take out the high, which means this low is weak and it can be taken out. So that was the concept that I was following for the past 2 to 3 months. So sticking to that concept, I expected this low to be taken out. And also, you can see that this low is kind of a low resistance liquidity, and there was a lot of chance for the price to take out this low. So that's why I was not eager in looking for longs, because suppose if the body closed above, then the story would have been different. I would have had a lot of confidence in looking for longs, but in this case, I did not look for longs. In the end, price, you can see tiny wick close above, so which is not much of interest for me. For but if you guys are in, if you guys follow the rules strictly, even a weak break is also a valid chalk. Then you could have looked for this trade and you could have got a winner. But sometimes I trust my instincts than the rules, so sometimes it pays off, sometimes it you know make me miss a beautiful trade like this. It is what it is. So let's focus on the trade. So there was some low resistance liquidity, and there is no sharp close above. So these two factors prevented me from taking this long. Price came down, mitigated this demand zone, and boss bullish. And if I take 61.8 level from year to year, 61.8 level comes exactly right here, and price mitigated it accurately. And once the price mitigates that, then there is no stopping the price. So that was a beautiful trade, which I didn't take because it was not in my rules. Cool. So, coming to the daily chart, coming to the next day, June 5, the price is, the daily chart is still in the same area of value. So, this is still my target, and this demand is still holding the price. So, if I see into the 4-hour chart, you can see that the structure is building up nicely. The price action is clean. Now, I can look for the price, some H1 confirmation right here, and push up to target this high. Clean, right? Cool. So moving on, here we go. So price mitigated into the 4-hour demand zone. All I want is the price to chalk bullish. Once the price chalks bullish, then I can look for this demand zone for the price to mitigate. Once the price mitigates this demand zone, then I'll be looking for longs. It sounds simple. Moving forward, here we go. Price chalk bullish. So I mark this demand zone, but this demand is, I don't know, this price action is not super convincing for me. Why? Because below the demand zone, we got the Asian lows, and there is also kind of equal lows, relative equal lows, and low resistance liquidity kind of formation. So this is a very good magnet for the price to mitigate, to take out and push the price up. So I'm not very super interested in this POI, but if the entry model plays out, then I must take the opportunity, especially M15 LC2X models. But unfortunately, price did not mitigate this demand zone. It almost came, but it started to push up, and eventually at 14, we saw that huge, massive candle broke up, and there is no returning back of the price. So that's June 6 or June 5 for you. So moving on into June 6. So now the price has taken the daily buy side liquidity. So which means once the price takes the buy side liquidity, there could be some bearish reaction. So today we can expect the price to be bearish for a while. So, but I need a strong lower time frame confirmation to play shorts. So from the 4-hour perspective, we can say that this demand is currently holding the price. If this demand gets flipped, then there would be a beautiful flip zone from which I can look for sells, targeting, playing the bearish reaction. So here we go. But before the price takes out the 4-hour demand, we can still predict that this demand is going to be taken out because of the low resistance liquidity being formed. So yeah, price mitigated this demand, and it's kind of a failed reaction right here. So step one, failed reaction, and point number two, low resistance liquidity. So these two confirm that this demand zone is going to be taken out. So I can directly look for cells targeting this low to be taken out. All right. Yeah. This demand got failed. So point number one, one, two, and three. Both all three played out. So all I wanted is a price to mitigate this demand zone, and I can look to for further push down. And yeah, I got mitigation into this supply, but the mitigation happened during the economic event, and you know what? This was the liquidity candle that mitigated the supply. So the candle size is very large, so I can't afford to take a trade from this kind of large candle. So there was no trades on this day. So yeah, if there was a risk entry placed directly limit order, then that would have been a very good trade. But I'm not a big fan of H1 risk entries. So I never trade H1 risk entries. All my entries are M15 confirmation, I mean M15 timed entries. So moving on to, okay, we got 10 more minutes. So let me quickly wrap up what happened on GU before moving to XAU. So, um, okay, yeah. Starting off, the target was this daily high, and price was coming off from the daily demand zone. So I was looking for the demand zones after demand zones for longs, but that did not happen. That entry model did not play out. In the end, price ended up taking the buy side liquidity. I mean, not yeah. Strong liquidation of the buy side liquidity happened, and in the 4-hour chart we got the confirmation of the chalk bearish, but I was not able to capitalize on this trade also because of there was an economic event and the price consolidated in the first half, and during the economic event price actually mitigated the supply and pushed further down. So this is all about GU in short for you. So moving on into XAUSD. So this is going to be a Dhamaka kind of week because I got two break-even trades and one losing trade in this on this week for XAUSD. So here we go. XAUSD June 2 daily chart. So here you can see that the daily as was bullish, and internally we are actually bearish, but we actually reached the premium structure. So and this demand, I mean the price at chalk bullish, and this demand is currently holding the price, and we can expect the price to hold this demand and continue pushing the price up till the price takes out the week daily swing high. And also note that we are also coming off from the weekly demand zone, so the reaction could be a bit stronger. So price coming off from the daily demand zone, so this makes this week high, and the fractal structure is also bullish in the 4-hour chart. So, and this is formed via sweep of liquidity, so it's strong rejection, and this demand is currently holding the price, and this demand is actually a flip zone which actually flipped the supply above. So looking for longs from from this demand zone is valid, and yeah, this is a weak high that I'm going to be targeting. Price reach the premium prices, thus the expectation is that price to come down to take out the um, you know take out the swing low. So from the H1 perspective, you can see that though the price is coming off from the daily demand zone, from the H1 perspective, the swing structure is still bearish, and once the price reach the premium prices, what we can expect the price to switch internally switch bearish, and then that bearish structure to continue till the price takes out the weak swing low. So that is what the expectation is. Since we are onto the premium prices, then now I can look for sells. If I get a small bearish chalk, then this would be phase V shorts. I can target this demand zone. This is my first target, and if the price internally was bearish, then this would be my second target. Cool. And yeah, price coming off from the daily demand zone, so it's obvious that price was bullish in the H1 chart. So now I can look to continue to play the bullish structure or if the price flip this demand zone and you know flip this demand zone, then I can look for sells from this supply targeting the demand below. It's as simple as that. So moving on to June 3. So the target was the daily demand zone. So yeah, price actually, from the 4 hour perspective, we see that the price has mitigated into a valid supply. This is a valid supply because it has got some inducements, and it has swept some strong buy side liquidity and then pushed down. So yeah, it is a valid uh, supply. So we can expect a deeper mitigation probably, and also we got some, and this is the first point for the price to come down. The second reason is that there is no demands to the left from which the price can react from. The only demand is this daily demand from which the price can react from. So we can expect the price to come all the way down to the daily demand zone. So this is the second point. There is no demand to the left, and the third point is there is a daily demand to the left which can be targeted. So three reasons why the price should come down. And yeah, from the H1 perspective, we see that there is a chalk bearish, and this is a very good demand supply zone from which I can look for sells. And on to, yeah, here we go. I got an LC1 directly at the start of the session during Frankfurt, but I did not take it because I just want to be more conservative. All I wanted is price to, give me a confirmation entry. Once the price gives a confirmation entry, price may or may not pull back to the 61.8 level. Sometimes once the price gives its confirmation entry, there would be straight push down. So I risked it. So I waited for a confirmation entry, and the confirmation entry was there. You know, Price gave me the confirmation entry. I think, yeah, this was uh, yeah, this was the confirmation entry. This was M15 chalk bearish, and no, sorry, yeah, my bad. So price came down, pushed up, came down. So this was the confirmation entry. So this is the M15, and this is the 61.8 level, and this is my mitigation candle. So this one is my mitigation candle. So placed my stop loss, still stop right here, stop loss just above, and just wait for the price to, odds to play out. Price came down well, took out this sell side liquidity. So now at this point of time, the trade is now set to break even because the price has already traveled 61.8 level of the total trade range. But once the price takes this sell side liquidity, it came down with urge, and know took out my stops at break even. And at the end of the day, the price actually came down, um, and it may target. So it is what it is. It's a bit cruel, but that's what trading is. So let me quit this and start again. So yeah, let's continue on to the June 4. Yeah, let's continue from June 4. So um, the daily is still in the day same area of value, so there is no change in the daily. So the price did not mitigate this daily demand zone. So I add that this in my instincts that the price can come down to mitigate into this daily demand. So I was looking for sells. So though there was a strong, you know, bullish shift, but I look this as a buy side liquidity sweep, probably because the price did not mitigate the daily demand zone. So if the price chalk bearish, then that would confirm that the price is going to come down, then I could look for sells. Then I waited for the price to chalk bearish, and yes, the price did chalk bearish, and this is a kind of evening star. So that's a kind of bit high probability trade. So once the price mitigates into this area of supply, then I can look for sells targeting this low and as well as this demand zone, daily demand zone. I got a lid in front of the supply. So if the price mitigates and takes out this layer, then I can look for sells targeting the daily demand zone. So initially, this candle made a promising look, but this candle was taken out. But eventually, there was this strong rejecting candle that tagged me in, and the price was coming down for a while. But you know, I got tagged in at 14:30. So that was horrible. And when after, before bed, when I opened my laptop, I saw that I was stopped out, and this POI got invalidated. So yeah, it is what it is. The target was clear. I had a clear daily drawdown. I mean, clear drawn liquidity, and the price was actually chalk bearish. So this chalk bearish is more convincing than the chalk bearish that I had with GU, which I missed. So this was much more convincing, but still, I was not. The entry model did not play out. It is what it is. So coming to June 5, again, still the daily demand is not yet mitigated. But if there is a strong bullish shift without mitigating the daily demand, then I can be looking for buys targeting the daily swing high. So the internal structure is bullish in the 4-hour chart. But if you see the internal structure of the internal range in the 4-hour, you can say that this supply has been flipped, and this demand is current this fractal, I mean internal fractal supply demand is currently holding the price. So if I get sufficient confirmation from this demand zone, then I can look for longs targeting this week high. But probably sometimes there can be also a chance that the price can flip this demand zone just to mitigate the daily demand, and then price can push further up. So this would create more liquidity. Why? Because currently the price is bullish. So if the price chalks bearish, then people would be looking for sells. And when the price mitigates this demand zone, again, all the sellers would be trapped, and boom, price will push up. So let's see what actually happened. Here we go. So kind of equal highs being formed. So only thing that I want is the price to chalk bullish. Once the price chalks bullish, then I can look for longs, targeting this high as well as this high. And yeah, price actually chalked bullish, and this the demand chain is holding the price, and all I can do is wait for an LC1 or LC2X models to play out, wait for the price to mitigate this demand zone, and then boom, all the buy side liquidity is being taken out. But yeah, price actually took out all the buy side liquidity without mitigating into any of the demand zones. And then once the buy side liquidity has been taken out, price with strong momentum internally was bearish. So this gives us a clear indication that the price is going to swing was bearish in the swing level just to mitigate the daily demand zone. So for now, there is no trades today, but probably the next day price can mitigate the daily demand, or the price would be much nearer to the daily demand that it is about to mitigate it. So from the lower time frames, we can time an entry and have a target as the daily demand zone. Here you can see that the price has swept the buy side liquidity, and there is some kind of low resistance being formed here. So I can look for the price to mitigate into the daily demand zone. So the daily demand is my target, and from the 4-hour perspective, you can see that the price has liquidated the internal high, which means the internal low is now become weak and it can be targeted. And price is also chalk bearish, by the way. So this is a valid supply from which I can look for sells. So let's see what H1 is about to tell. H1 also mitigated the supply, and it is about to chalk bearish. Once the price chalks bearish, there would be a new supply. Then I can look for sells from that, targeting the both H1 weak internal low as well as the daily demand zone. Here we go. There is a lid here. Price H1 chalk bearish. There is a lid. This was my liquidity candle. This was my liquidity candle. I placed my trade right here, and price came all the way down, moved my stop to break even, took my stops at break even, and price pushed down. So here's what it is. And eventually, the price pushed further down, took out, made H1 was bearish, and eventually mitigated the daily demand zone. So yeah, it is all about chasing the price down to mitigate into the daily demand zone. So yeah, so we did not have this much of price action this week. So what happened in short in this week is, price took out the high. Once the price took out the high, there was this demand zone that I was targeting. So the price was a bit consolidative, but at Thursday, I think price swept the buy sell liquidity and pushed down. There was a kind of buy supply being formed. I looked to time that entry. Yeah, I actually timed it perfectly, and just about the price was coming down. I moved my stop to break even, but price actually pushed up, took out my stops at the break even, and pushed down into the daily demand zone. So this is all happened on this week in short. So it seemed much little on the daily time frame, but it requires a lot of analysis and a lot of emotions were going I was going through on those trades. It was not an easy thing to break even your trade, because there are two options: either you could get stopped out at break even, or you know if you didn't break even the trade, you might lose -1 hour. So it's a bit calculated risk, so it's a bit mechanical. So for me, when the trade reaches 61.8 level of the total trade range, then I'll be bringing my stops to break even. So I kept that as a mandatory rule, so I don't feel for the break even trades. I feel that those actions were part of my game plan, I executed it perfectly. So the result may be positive or negative, it all depends upon the random distribution of the price action. So yeah, that's all I want to convey this week. Yeah, it's a very good and challenging week overall. I got only one losing trade this week. So I think one losing trade previous week in the GU and one losing trade in XAU this week. And yeah, two break even trades, of course. Yeah, let's see where this goes. Let's be consistent and let's not deviate from our game plan, or let's not allow the emotions to destroy the learning curve. So yeah, that's it from my side. See you guys on the next week. Until then, cheers, guys. Bye.